Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, let's update our analysis of the euro currency. So you can see that market finally has reached the target that we have specified in the beginning of the week, and we said that market probably should reach the 138.50 area, since that is the minor target 618 extension of this big ABCD pattern. And markets as a rule, if even they intend to reverse to the downside, as a rule they hits, in the most cases they hits at least the minor extension, the 618 extension. So as you can see, market has done this. Also guys, here was some minor targets, that was the ABCD target of this minor ABCD pattern, and here we have some sort of the three drive. So that is the first drive, second, and finally the third drive. But as you can see, market has approached and hit the target of the three drive by this strong explosive candle to the upside. That is not good for three drive pattern. That's the same as, for instance, market has hits the target of the butterfly by this strong candle. This increases the probability that this pattern could fail, or at least it will not show the reversal as it usually shows. What does it mean? The tricky moment concerning this three drive pattern stands with the target, because as you know, the target of the three drive pattern is the low between the second and the third drive, so particularly speaking that low. So if, for instance, three drive look gradual, and if market will reverse to the downside, you could count on the reaching of the low between the second and the third drive. And in our case, this is the confidence supports 137.22, 137.20, 137.30 area right here, and taken out of these lows. Okay, but for me it looks a bit deep retracement. In this case, market will erase all this thrusting action to the upside. It will show this really deep retracement down. Well, in fact, this could happen, but existing of this strong candle makes this possibility much lower. And I will not be surprised if market will show, for instance, just 37.84 retracement to the nearest fib support and turn to the upside, because as you can see, price currently is not at overbought, and all just market has done is hitting minor target of the 618 extension of that ABCD pattern, and retracement down after this target should not be too significant. And that being said, that if this action to the upside would be gradual, we could say that market probably could show this retracement, and that is typical retracement, and we could count on retracement right to the confidence support. But in our case, I will not be surprised the market will show just minor bounce to the downside. But anyway, we will be able to estimate target of this possible retracement a bit later, when we will see the reaction of the market of this on this resistance area. But right now, this current situation tells us that we should not take the long position right now, since we're at the significant resistance, and we should count on some retracement to the downside. If you're a scalp trader, you could think about taking scalp short. I don't know your trading style, but that is typical situation where the scalpers usually looks for possible short entry, scalp short trades. Trend holds bullish, as you can see here on the daily time frame chart. Well, and today, guys, as you know, we will get the non-farm payrolls release. The major forecast, as the pool of the investors by the raters, suggests that market should show somewhere about 149,000-150,000 job created, and if market will show this number, this probably will be treated as the relatively positive surprise, because the ADP report shows the fewer numbers than expected. if market will show somewhere around 120,000, that will be treated as the modern result, and probably will not lead to any significant action. Any result that will be fewer than 100 and 120 jobs, that will probably lead to the negative surprise and further appreciation of the euro currency in the short-term perspective. Well, that's approximately the numbers that Reuters shows in its research of the forex markets. You know, guys, that I do not trade the data releases, so I just share with you the information that I have read recently in the Reuters news. Well, maybe this will be helpful for somebody of you. Well, that's what about the daily time frame chart. On the 4-hour time frame chart, we see this minor ABCD pattern. You can see that really fast action to the upside, and you can see that market has hit the weekly pivot resistance one, but not quite has hit the target that stands at 20 pips higher from the current level. And I suggest that market probably could reach this area prior the non-farm payrolls release. When the market will waiting for the numbers, so could be some fluctuation, and probably market could reach this area. That also could happen by the situation on the 15-minute chart. I did not see anything interesting on the hourly time frame chart, but I will show you the picture on the 15-minute chart. On the 15-minute chart, we have this possibility for the butterfly pattern that has the 1618 extension approximately at the same area where stands the target of the 4-hour ABCD pattern. I can't exclude that market probably could reach it by this butterfly. Well, we'll see. It's not really interesting and not really intriguing, so this pattern is relatively small, and hardly somebody will trade this pattern. But if you're a scalp trader, you could use this butterfly if it will be really work, and if market will really reach this area by this pattern. Since this is a reversal pattern, maybe this will be useful for scalp traders who search the possibility to take the short position. Okay. So that's in fact all that I would like to say about the euro currency right now. The major conclusion that we could do right now on the euro currency is we should be ready for retracement to the downside. And when it will start, we will be able to understand how deep it will be. But the major two levels to watch for is this one, 137.84, the first level to watch for, and the second one is this confidence support, because this action to the upside was really fast, and market probably will show just minor retracement, and we will be searching for this level for potential to enter on the long side of the market, because as you remember, our longer term analysis suggests an upward continuation, because in general as we have discussed in our weekly researches, we think that market is now moderately bullish rather than bearish, and more bullish signs are present on the higher time frame charts, on the monthly time frame chart, on the weekly time frame chart, and we can't exclude that market really could continue move to the upside. Well, guys, the target of the current week has been reached, so if you intend to trade the data release and non-farm payrolls, well, good luck to you. Others who do not intend to trade it probably could take the profit and take the rest, since today is Friday. Well, that was really good week for the euro currency. Let's see what will happen on the non-farm payrolls release, and what retracement market will show, if data will be say strong and positive for United States dollar.